the moment is in technology and specialty metals. The EV revolution thing, rightly or wrongly, is driving a lot of investors towards battery metals, whether they be lithium.
Isn't silver used in electric vehicles? Wouldn't it stand to reason?
Not really, no. No, silver has some usages in solar panels, for instance, but electric vehicles, minimal. So it's not going to be driven by that.
Okay, but what is going to be driven by that? Tell us about the specialty metals that you see really rallying.
The thing is that the EV revolution is going to require enormous extra amounts of lithium, other battery metals, because lithium is not the only combination out there. You know, people are talking about, move to hydrogen, so you would actually just sort of leapfrog all over the lithium and then maybe leave lithium behind, but I don't really think that that's going to happen. I mean, they'll both coexist. And then you've got rare earths, which aren't rare, but they suffer from Chinese control and domination.
They control, what, 90% of the world's rare earth supply?
At the moment, yeah, of the mine supply, yes. But that's changing. The West is gradually clawing back percentage points, but when I say percentage points, that's all I'm talking about. It's not tens of percentage points. We're going to need a much bigger surge of production in the West to rebalance away from China dependency in rare earths. But for the moment, the Chinese are sort of playing ball. They were very aggressive 10 years ago, cutting off the Japanese, for instance, from supplies. They're not doing that at the moment. And they're not pushing the prices up too high either, because they saw once before that when they pushed the prices too high in 2010, 11, that they actually killed off demand.
So you're bullish on lithium. What else in the specialty metal sector?
Antimony, tin, tantalum, all these minerals that are used in, minerals and metals that are used in all sorts of technological, we've had this big semiconductor crisis in recent times. You've got cobalt, you've got samarium, you've got tin. Tin is the solder that holds all the chips together.
And tin has tripled over the last year or so.
Last year. It has been the best performing major metal.
It's gone from what, 13,000 to 39,000?
39,000 a ton. It's mind-blowing.
So does tin still have room to run then?
If it goes up too high, there will be replacement. So it's sort of reached a level which is great. I mean, anyone moving into the tin space now is minting money. But you don't need tin any higher than this. Because with most metals, even with this battery metal phenomenon, if the metals get too expensive, then they price themselves out. And people start looking for alternatives, if there's an alternative.
So if you've missed out on the tin bull run, do you see another opportunity for a metal, precious, specialty base or otherwise that still has a rally ahead? The
dilemma is that virtually everything is run. The thing that I would say has not run, even though it's been showing signs of life, is uranium. I've sort of coined this term that yellow cake is the new green, and so uranium now is being seen both by its traditional investment fans, but also by some environmentalists as being a zero carbon source of energy via nuclear energy. So this is a total revelation, because traditionally only really the left in France or in Russia have been supportive of uranium. If we start to see the left side of politics in many other countries seeing uranium as a solution, because as we've seen in recent times, solar and wind, can make up a big component of new energy, but just not sufficient.
Yeah, nuclear energy has been gaining broader acceptance with the narrative of decarbonization and anti-fossil fuel.
Yeah.
But uranium has had a 9-year high already this year, hitting
from an atrocious base.
Yes.
I mean, it was flatlining for a very long time. So when a patient's been flatlining for 9 years and suddenly, its eyelids flicker, that means there's life there. But compared to the levels that uranium reached in the first decade of this century,
$137 per pound back in 2007.
Yeah, exactly. We're still under $30 in the spot price. So it's really got a long way potentially to go. We don't need to see it back at $135. But if it starts to move up above $40, we will start to see investors, mining investors particularly, actually starting to reactivate mines.
It hit a high this year of around $51 per pound.
Yeah, but the uranium price consists of two things. There's the spot price, where virtually no transactions are done. It's only someone who's desperate for a small amount of uranium to, fill some supply need. Virtually all the uranium is sold on contract between the big utilities and the uranium companies. The spot market is almost an irrelevance. And so people focusing on that too much might end up sort of like fooling themselves that the spot price is actually the relevant price, because it's not.
So uranium is the commodity you are most excited about at the moment?
Yes. What's the one that hasn't moved? Whether you like it or loathe it, it's the one that seemingly has the most upside.
What about copper? There was a lot of buzz earlier this year that copper is the new gold. Certainly in terms of we can expect a stronger rally in copper to continue.
Yeah, well, a lot of people are linking copper to the battery revolution as well, and the EV revolution, which is true. But copper tends to move up in sort of like step motions rather than just soaring. And it moved up a lot last year, and it's now very much stabilized and just sort of like drifting along. It would really need a major supply crisis, a specific supply crisis, for it to make another leg up at this point.
All right, so Chris, you have been a leading strategist in the sector for several decades now.
Yeah.
What would you say is your best investment advice? Where should they be looking at allocating some funds to, capitalizing on the trends that you're seeing?
Well, definitely uranium looks attractive. Silver, I think, for a move from low 20s to high 20s is actually proportionally a pretty big move. And probably a bigger move than you'll see in most of these base metals at the moment. So, poor old silver doesn't look that exciting, but, I think it is. You have to watch out, particularly if you're looking for stocks, that in the lithium and the rare earth space, just because it's got lithium in the name or rare earths in the name, whether they're actually ever going to get to production. Because if they won't get to production, they're not going to be bought up by anyone. Because the Chinese are not that dumb that they're going to be buying a company just because it's got lithium in the name. It needs to have a lithium production or a plan of development that is serious and credible before people will buy it. Just naming a company something will not cut it.
Yes, having a lithium or rare earth in the name has spurred some interest, but you're saying that's not a safe play. Are there any companies that you can list that you think do have the fundamental production established, the fundamentals there for real production?
Well, in rare earths, what's happened in the lithium space is you've got there's been a traditional cartel there, and that cartel has been augmented by the addition of a few Chinese companies like Ganfeng and Tanqi, but really that group has virtually not changed. Despite everything that's happened, we've seen a concentration in the lithium producers. In the rare earth producers, you've got companies like MP, which runs the Mountain Pass mine in the US. You've got Energy Fuels, which has now entered the space. And you've got Lynas, which is a hangover from the first lithium boom of 10 years ago, which is an Australian company that has a mine in Australia and processing in Malaysia. But pretty much that's it on the production front.